China just rolled out a massive $69 billion stimulus package. And if Indonesian investors think this doesn't affect them, think again. The World Bank just upgraded China's growth forecast to 4.8%. But here's what most people are missing. This growth isn't coming from where traditional economic models would predict. 70% of China's growth comes from exports, not domestic consumption. Think about that. The world's second-largest economy is shipping products globally while household spending at home remains weak. Beijing launched a 500 billion yuan infrastructure fund. Markets responded immediately. The Shanghai Composite jumped 4.15%, its biggest single-day gain in over 4 years, but excitement cooled fast. Within weeks, markets gave back half those gains. Reality check delivered. Here's why Indonesian investors should pay attention. Regional economists have established a clear connection. When China's GDP drops 1 percentage point, developing East Asia and Pacific economies slow by 0.3%. That relationship works both ways. Stronger Chinese demand means opportunities for Indonesian exporters, especially in commodities, manufacturing components, and consumer goods. LICAH Investment Academy analyzes these interconnections to help Indonesian investors understand how global economic shifts create both challenges and opportunities in regional markets. Goldman Sachs projects China's average growth at just 3.5% from 2025 to 2035. Compare that to the 9% average from 2000 to 2019. The era of breakneck Chinese expansion is over. Economists call it stimulus without rebalancing. Beijing keeps pumping money into infrastructure and exports, but the foundation of sustainable growth, household consumption, remains surprisingly weak. Core inflation barely positive, headline inflation flat, lots of production capacity, not enough demand to absorb it. This creates deflationary pressure across the region. For Indonesian investors, the strategy is clear. Watch bilateral trade flows, monitor commodity prices, track currency movements tied to Chinese policy, and understand that China's economic model is fundamentally changing. This isn't about predicting every market move. It's about recognizing major structural trends that create strategic positioning opportunities over time. LICAH Investment Academy provides practical financial education for navigating these complex global dynamics. Subscribe for more insights on Asian markets and international economic trends affecting Indonesian investors. Learn more at licahinvestmentacademy.com. Remember, this content is educational only and not financial advice. Always consult qualified professionals for investment decisions.